Hello, welcome back to Cost and Management Accounting in 6. This video, we want to look at the preparation of the production budget. And this question that we have, that is 6.3. So we are going to look at the preparation of the production budget. So it is that the production budget, in terms of definition, is a quantifiable plan that sets out how many units of products of a company needs to be produced in order to meet its sales goals. So you would see that the production budget is prepared in line with the sales targets that are there at an organization. So what we are trying to say is there is a relationship that should be there between a production budget and a sales budget. So the production budget is trying to respond to the sales requirements that have been set in terms of the business. So basically, this is what we have in terms of the explanation of a production budget. So we go back to our question and try to see what does it say. If you go at the beginning of the question, it reads Denver Computing, producers of mouses and keyboards, provided you with the following information for the year ending 31 March 2015. I use the information below to prepare the production budget. So we're given a column for mouses and keyboards, and you're given information that you're given there in terms of sales in units, a production rate per hour per unit, a production hours per unit, stock of finished goods. That is our opening at 1 April 2015. So obviously, this is going to be your opening stock. And then at 31 March 2015, it becomes your closing stock, considering the dates that you are given there. So we are going to prepare a production budget. So we're going to go to our other section, trying to see how did we present that production. So this is our production budget, whereby we have a column for mouses and keyboards. So what we are going to do in the production budget, we are going to calculate the units to be produced. So there's a formula that we are going to employ in that production budget, whereby we are going to say units to be produced, units to be produced being equal to. We are going to start with expected sales in units, and then obviously we are going to make our calculations in terms of units. So this is a quantifiable plan. Remember in the definition that we put at the beginning of the video that the production budget comes as a quantifiable plan. So it means all the calculations that we are going to make will be in number of units. So we've got expected sales in units, and then we are going to add our closing stock. And then when you add our closing stock, we are going to get our total needs, and then we subtract your opening stock. With that, now you get the units to be produced. So this is exactly how we are going to present it. So at the beginning of it, we are going to have our expected sales in units. So we are coming here, we are saying expected sales in units. Then you go and check what we have in terms of expected sales in units. We're seeing that we've got 5,000 units in terms of mouses, and then we've got 3,000 units in terms of keyboard. So we can come here, and then we are now saying 5,000 for mouses, and for keyboards we've got 3,000. And then we are going to add our closing stock. So closing stock again, remember we have our stocks at the end of the table. There where we identified the opening and closing. So our closing is the last one, which we have is 2,750 for mouses, and we've got 1,950 for keyboards. So this is the one we have, and then we can just come here. And for mouses, we are saying 2,750. For keyboards, we are saying 1,950. And then after that, we can add the two. I remember we're saying add closing stock. So for mouses, 5,000 plus 2,750, you're going to get your 7,750. You go to keyboards, 3,000 plus 1,950, you're going to get your 4,950. So this is becomes your total needs. So we come here. We are saying total. So for total needs, now we add the two. This is the representation that we have in terms of our total figures that we calculated there. So we can put our description are just in line with our figures. So this is our total needs. So beneath that, that's where you're going to subtract opening stock. So you're saying less opening stock, and then we can just try to identify what figures we have in terms of opening stock for mouses and keyboards. We come here. Our opening stock is the first row that we have there under stock of finished goods. So we've got 2,500 for mouses and we've got 1,800 for keyboard. So we go there. So we are saying less here. So it means we are subtracting. So we come here. We are saying 2,500 for mouses. So we can show in brackets to show that we are subtracting, and then 1,800 for keyboards. So we can calculate it, and then the final figure that we are getting now becomes the units to be produced. So here we have got our units to be produced. And we see that we've got 5,250 under mouses, and we've got 3,150 under keyboards. So this is basically the calculation that I made under the production budget. So we see that the final answer that we are getting here is presented in terms of number of units not valued. We have to take note of that. But basically, we should take note that when we are preparing the production budget, what is giving us the background of the information that we are going to use is the sales targets. We see that the expected sales in units is the first item that we put in the production budget, meaning the sales budget is going to give us a guideline in terms of how we are going to go about it in the production budget. So this is what we've guys in terms of the production budget. Let's meet again in the next video. As for this video, I'm out.